used to explain all kinds of things about modern business. But, in fact, that goal gives no guidance as to how to do it. Financial accounting is what provides the roadmap for businesses to follow. It is far too aggregated to reveal much of anything about operating efficiency, and it treats employment in very odd and adverse ways. Under the modern practice of accounting, a dollar spent on employees is arguably the worst expenditure a company can make, especially as compared to any physical asset. Simply moving dollars from employment to other categories, including non-employee labor, immediately makes companies more valuable. The reason why ideas about managing employees better fade, despite evidence they are more efficient, is that they do not fit with financial accounting and the now prevailing orthodoxy of business leaders. That orthodoxy is more consistent with the ideas of Frederick Taylor and scientific management from 100 years ago than they are with ideas from the past generation or two. It is not surprising these practices don't turn out well for employees. More surprising is that they do not seem to turn out well for the business either. While they may make the financial accounts look better, that is only because of the limitations of those accounts. This book also follows something of my own journey through these topics, starting with The New Deal at Work, published in 1999, that documented the breakdown of internal careers and the rising use of outside hiring. The question was, how were companies managing employees without lifetime employment and internal labor markets? In the early 2000s, all the attention was on GE as the model, which was surprising since GE was doing what most other large corporations had always done, using the traditional internal labor market with long employment, if not lifetime. Companies without the scale and systems that GE had could not copy the GE approach, and frankly, few actually tried. What companies were actually doing was what they had always done: workforce planning, succession models based on the assumption of long or lifetime employment, but just not doing it well because their budgets and staff had been slashed. I wrote a follow-up book in 2009 called Talent on Demand that documented why the old models for managing talent had to be adjusted to deal with the uncertainty of contemporary business and how that might be done. The preferred approach in practice was to continue using the existing tools even though they were not working. What I did not anticipate is the extent to which businesses and other large organizations were able to get by with no systematic planning or practices for managing talent. Every vacancy was treated as a surprise, as illustrated by the periodic discovery in the business press that employees are retiring with no successors to replace them. Employers could simply wait until there was a vacancy, then look for candidates who had done the same job someplace else and grab them to fill it. Why not, one might wonder, as it cut out all that planning and practices? The answer, described in detail here, is because it costs a lot more to hire outside, and skills and knowledge that employers needed for many jobs simply do not exist outside their own company. As an economy, we cannot operate simply by hiring from other people. This is why we keep hearing persistent complaints about skill shortages. It's because we stopped training. After the Great Recession in 2009, complaints from employers on precisely this problem became common. In spite of the high levels of unemployed people who had held jobs just before, employers complained there was simply no one to hire to replace the people laid off a few years before. The truth was that very few people could step right into those jobs without needing any training. I wrote, Why Good People Can't Get Jobs, to explain that this situation was the result of giving up on training and the emerging practice of hiring on the outside job market, badly, to provide talent. Employers expected colleges to provide the skills they were no longer provided through training and job experience. In 2016, I wrote, Will college pay off? Out of frustration with the common view that college education was the answer for anyone seeking a good job, highlighting the fact that employers actually cared more about the work experience of students in school than about their academics. Since then, I have written a number of descriptive articles for the Wall Street Journal.